Good evening, ladies and gentlemen. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow using a safe, predictable, consistent 1% per week trading strategy I came up with for my 9-year-old daughter. Back in 2008, when she was 9, she said, "Daddy, can you teach me how to trade just like you?" I said, "Sure." So here's the challenge. First of all, it had to be simple, safe, predictable, consistent, and no way that she could lose. Fine, okay, that's my challenge. So here are the rules I came up with for my 9-year-old daughter. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable, and they must have weekly options because that's what we want, weekly cash flow. And then make sure all the numbers work. What do I mean by the numbers? What can I buy it for? What can I sell a covered call for? What can I get as a return? And does the chart make sense? Good evening, ladies and gentlemen. Alrighty. Follow your contacts. Somebody just give me a second. Hey, Darwinley's here. Matthew, Bendy, Polo, Tim. What is it, Friday night? Darwin, how are you doing? What is it, Friday night? Darwinley, how are you doing? Oh, that was recorded. That's cool. What is it, Friday night? Darwinley, how are you doing? I want to record that one. All right. Hey, Brandon, what's happening? Not a whole heck of a lot. It is a Friday today. We are finishing week number 38, which week number 38 for the year, which just so happens to be week number 12 for the third quarter. Remember, there's 4 quarters in the year. We are still in third quarter. Now, we have 1 week left to go to the third quarter. Then we start over with the fourth quarter. Bo, how are you doing there? Bo, I'm kind of curious how you're doing because you've been telling me you've been following me for a while. So I'm kind of curious. How has your rate of return been since you started following? And how's your trading coming along? Okay, I'm kind of curious. All right, that being said, let's jump in, see where we are, see where we're going, see what's up, all those C words. Anyway, let's see what we got in store for us today. Big Stepper, how you doing? DeWalt, Oreo, what a good name. Phil, Lawrence, how are you guys doing today? All right, so that being said, for those of you who've been following me for a while, you know that I write stuff down in my handy dandy notebook. Well, over the last week, this is what we came up for this coming week. So we're going to go through some of these and see how they look. And are they contenders for a simple, safe, predictable 1% strategy? Well, let's see. Jack, how you doing? Back again. Crypto Dude, what's happening? D Weaver. Charles, how you doing? Salco, how are you too? All right, so if you know, I do write them down, so let's take a look at them one at a time. My hair looks terrible. All right, that's a little better. Okay, 60 years old. I still got some buy. Slepper, you leaving? You just got here. We just got started. How can you possibly be leaving so soon? All right, that being said, let's jump in, see where we are, and take a look at some good stocks and tell me what you think about them. First, we're going to take a look at Cisco, CSCO. Now, there are 2 Ciscos, SYY and CSCO. So we're looking at Cisco Systems. First, foremost, every time I pick up a stock, very first thing I want to see the 1-year chart. I want to see where the high of the year is. I want to see where the low of the year is. I want to see where it was a year ago, and I want to see where it is now. And then I want to see the direction. Okay, so she kind of slams down for a bit, turns around in August, and then shoots the upside. Well, great. Bad stock, you don't like Cisco? Bo, I'm so pleased with the strategy you taught me, literally life change from. Bo, seriously, dude, you got to send me your number because it really moves me to hear these kind of things. Great, it's nice to read it, but I want to hear the excitement in your voice. Let me open it up, see if you want to join us here for a second. Uh-oh. How do I invite somebody here? Reply, print, mark, view, mute, 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 mute. No, I don't know how to do it. I don't know how. Sorry. I wanted to hear from you, but it's okay. They laid off a bunch yesterday. Oh, Cisco. They laid off a bunch. Vanguard stocks. You'll start. Okay, Agent Amigo, you got to give me the ticker symbol specifically so I know which one it is you're talking about. All right. That calls for a cough drop. Got to have a cough drop for a cough. All right. Maria, how are you this evening, Miss Maria? Nice to see you. Mary L. Via Byerly. Alrighty then. And Dana, Chris, how y'all doing? Okay, let's jump in and take a look. Thanks, Chris. Pico. P-E-C-O. Never heard of them. And that's not a good sign. P-E-C-O. We'll take a look at that. We got a couple more to take a look at before we get to that one. Really, Bacon? You're going to rub it in? Hey, Gramps? Hey, you wait till you're here, see if you look as good as I do at age 60. Okay? My grandson's 4 years old. I still get out and play soccer, run around, act like a child. I have blast. Hey, Parkus, you're here. Pakaris. Can't comment. Oh, Tesla. What about your thoughts? I don't like Tesla only because Tesla doesn't share their profits. There we go. Hey, hey, hey. Hey, hey, hey. It's Fat Albert. We're going to sing a song for you, and Bill's going to tell you a thing or two. Okay, I got 529 planned for my told, and all the investment, they are Vanguards. Is it good? I actually need the ticker symbol. Hey, Bill, how are you? Toddler, yeah, I know. PLTR is going to be a no, they don't have any dividends. So when the name of the channel appeared at the left-hand corner, right there, see that right up there? Dividend investing for weekly cash flow. So if PLTR has no dividends, why are we looking at it? Pakaris, Nike, I'm going to write that down. NKE. We'll take a look at Nike in a little bit. Hunter, how you doing? Versailles, love, cool. Jason, David Jensen, Ford. Okay, besides the joke, thoughts on Chipotle? No, Chipotle doesn't have dividends. Sorry, Bacon. Okay? No dividends, no thank you. Now you got to remember one thing, or you got to remember a bunch of things. How you, James? Inspire me more. How you doing? Thoughts on VOO? Michael, please, you didn't throw that piece of turd at me. VOO. What do you guys think? Think I should pick on Michael with VOO? For those of you who've been here long enough, you know my thoughts on VOO. It's a no, no, no. Hey, guess what? Christmas is coming out. So it's going to be no, 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 ho, 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 VOO. No, thank you. Sorry. Now, VOO, I don't like it for several reasons. Okay? Chipotle is going to be a no. So let's take a look at VOO. And Michael, I'm going to explain to you. Before we do that, let me finish up with Cisco. Okay, we got Cisco on the board. Let's finish it up. High, low, where it was, where it is, the direction it's going. 51.97. We'll be looking at the 52s. The 52s are 44 to 48. That's not 1%. So much so soon. See you later. Bye. VOO. Here we go. Now, Michael, I'm going to explain to you why I don't like VOO. First of all, Michael, I am 60 years old. I am retired. I'm not looking for capital. I'm not looking for capital. What do you call that? Stock appreciation. I'm not looking for the stock to go up. Seriously, I'm not. What I'm looking for is cash flow. That means monthly income, or weekly income, as I like to call it. Weekly income every single week. Okay? Now, VOO, I know they pay monthly options. Not monthly options, but sorry, monthly dividends. Great, fine. And that's probably what attracted you to VOO. But what are they not telling you about VOO? Because I like to think that people are intelligent until they do something stupid. Okay, now, I'm not saying that you're stupid, but let's take a look at the numbers on VOO, okay? Because everything is about the numbers. If I'm going to invest my money, I want to make sure I invest it into a place that is simple, safe, predictable, consistent, get me a 1% per week, which 1% per week comes to over 50% per year. Okay, great. Well, let's take a look at VOO. Well, right now, it's at the high of the year, 524. Okay, the 525s are going for $2.05. Now, I'm not a mathematician, but I do know $2.05 on a $500 stock, that's less than 0.5%. No, thank you. But wait, Michael, it gets worse. Hold that thought. Now, if you didn't know, for those who don't know, okay, for those who don't know, this screen right here behind me, this is live on YouTube. So you can look at all the numbers, all these little numbers right down here. Okay? Now, Michael, check this out. VOO. Do you see that number right there? That is what's called the yield, or the rate of return. You take all your money, stick it into here, and it's going to give you a 1.28% return. 1.28. That's $1 for every 100 you put in. Why the hell would you put your money into something that is worse than inflation? Okay? So you're actually going backwards with a piece of crap like this, in my humble opinion. Okay? Now we know interest, what do you call it? Inflation is well over 10%. Now the reason why I'm saying it's well over 10%, a few years ago I used to shop at Walmart. Walmart used to have these soda machines out front. The soda machines were 50 cents a can. Well, now they're 75 cents a can. Well, I know that's not a lot of money, but it is a 50% increase. So you can't possibly tell me that inflation is 10% or less. No. Eggs 4 or 5 years ago was $1.79 for a dozen. Now it's over $4 for a dozen. That is not a 10 or 15% increase. That's a 100% increase. I could keep going on and on about more and more stuff that we had 4, 5, 6, 7, 8 years ago into where we are now. And yeah, no, sorry. So that's my opinion. VOO paying 1.28%. No, thank you. All right, Michael, I like to think you have more brains than that, but that's not it. Let's take a look at the historical data. Historical data goes back as far back as the company will allow. Well, when had they first started offering dividends? Well, we're looking at dividends only. Now, see, right here, dividends only, and we're going to go in right here, looking at the maximum amount. So it goes all the way back to the very beginning with VOO, the very first dividend they offered right here, 2010. That's 14 years ago. I like 20 years of increased dividends. So why would you put money into a company that only has 14 years of dividends? But wait, it gets worse. And I'm pretty sure they didn't show you this either. Look at the dividends. The very first dividend was 56. Then it went to 53. So if you're putting your money into a company and the company gives you a check for the first year or the first quarter, and then the very next one they give you is less, wouldn't you be asking yourself, hey, what the hell's going on? Aren't you supposed to be making money, not losing money? But wait, let's take a look. 2010, 56, 53, 54, 57, 58, 69, 69, 57. That's backwards. That's not increasing, that's decreasing. 64, 69, 94, okay, 94, 67, backwards again. Okay, it's not consistently increasing, it's going up, it's going down. So 94, 67, 74, 79, 91, 78, backwards again. 81, 88, 98, 90, backwards again. 90, 95, $1.09, $1.01, 95, 88, backwards again. Up, down, up, down. There's no consistency whatsoever with VOO. If I'm going to put my money into a company, I want it to consistently increase. Now, what do I mean by consistently increase? Well, let's look at this one. MSFT, we all know who Microsoft is, right? So let's go all the way back to the beginning from Microsoft. Microsoft okay, all the way back to the beginning from Microsoft. 2003. Okay, what does that mean? 2003? Well, that's 21 years of increased dividends. Look, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75. Consistently higher and higher and higher. And that's not the only one. Here's another one. There are actually about 300 companies that have consistently increased their dividends. This one I'm going to stop back in the 90s because this one has 70. That's seven decades of increased dividends. So I'm not going to go all the way back to the beginning. But look here, 1998, 25, 26, 28, 29, 30, 31, 34, 37, 39, 40, 41, 45, 50, 54, 58, 62, 66, 68, 72, 76, 79, 82, 90, 95, and a buck. Consistently increasing. So Michael, my question to you, why the hell would you put your money into a company that doesn't consistently increase? But worse than that, they pay 1.28%. You got to be kidding me. Joshua, how you doing? All right, Michael, you're new here, so I'm going to let it slide. Only because I'm a nice guy. I don't know, I guess that. Sorry, bacon chipotle, no thank you. Haven't done AGNC yet. Hold on. I missed some of these questions. These aren't questions. These are just, evening, Rich Bruner, how are you? All right, how all these people? Snowflake, how you doing? Alden, Gigi, how are you? Tesker, Scott, Beams, Bal, Hart, Mac, Scars, Snowflake. Okay, Vitkus. Do I like AGNC? Well, let's take a look at it. AGNC. Okay, AGNC, always, always, always. Where's the high? Where's the low? Where was it a year ago? Where is it now? And what is the direction? Look at the direction. Nice, slow, steady to the upside. Well, currently we're at 1049 at the moment. Okay? The 1055s are going for 8 cents to 12 cents. You're barely getting your 1%, just barely. But let's take a look. A year ago, we're sitting at 1015. We bottomed out at 676, and that was the end of October of last year. So our high was yesterday. Well, whoop-a-dee-doo. Here we go. The last 30 days, here's our high. Here's our low way over here. So we got the low, goes up, pulls back, up, pulls back, up. Now she's coming back down. So I like AGNC. However, AGNC is actually in downturn now. Because what you're going to find, hi, where are you from? I am from the Boston area. But if you're coming down the downside, because you're going to see, that's all stocks do. They go up, they go down. They go up, they go down. Moonwell, I have no idea what Moonwell means. Up, down, that's all they go. AGNC right now is at the 30-day high. Now she should be coming down. And we'll be probably looking at AGNC in about 2 weeks. Now, did you hear me? We're going to look at AGNC in 2 weeks. So I write it down in my book. AGNC in 2 weeks. AGNC. All right, so I write it down, AGNC. It just so happens that these are all the ones we wrote down 2 weeks ago. So those are coming up for consideration this coming week. So as soon as we're done with the questions, because you guys keep throwing questions at me, as soon as we're done with the questions, we can start looking at these. You got that, Michael? Now, Mike, I don't mean to pick on you for any reason whatsoever because you're new here. All right? And I understand when people are new, they take the advice of people that they know and they trust. You don't know me. Okay? Rick Johnson, how you doing? You don't know me. Okay, I'm just some random guy on YouTube or some random guy on TikTok. But I've been here since January sharing this information. Yeah, Rick, we're talking about stocks and options. Okay, so QCOM, ooh, I like QCOM. Hold that thought. QCOM, we'll look at that in a second. But anyway, as I was saying, okay, you're new here. Now, it's very challenging for someone who considers themselves a rational, halfway decent, halfway intelligent person to see someone they don't know talking about something that they don't understand. Okay, so everybody is used to AYP, annual percentage rate, or annual yield percentage, whatever. APR, annual percentage rate. Yeah, annual percentage rate. So they take a look at all their investments as if what they would get by the end of the year. Okay, great, fine. Well, now, here you have this guy, random guy on YouTube, that's me. I'm telling you to stop that thinking and start thinking about weekly returns. Because I don't know about you guys, but I don't work anymore, but I didn't go to work to get paid at the end of the year. Okay? Does cryptocurrency have better gains? Rick, I don't do cryptocurrency at all. I do not do cryptocurrency at all as of yet, until it is welcomed at Dunkin' Donuts, ExxonMobil, so I can put gas in my car, until I can pay my bills with cryptocurrency. Until then, I don't look at it because it doesn't pertain to me. Let me finish up my point here, Michael. Most people are used to annual percentage rates. So I'm asking you, step out of your comfort zone and take a look at weekly returns on your money. Okay? I grew up, when should I invest? Yesterday. I'm broke. Well, then you need to get a job and then start working and contribute to society. Okay? We all need to contribute to society. That's what we're doing. Okay? You, your brother, your sister, your aunts, your uncles, the cousins, the guys down the streets, the guys around the corner, the guys at the end of the block. We all got to contribute to society in one way, shape, or form. Because I don't want to pay for someone else to do nothing. Okay, I put in 40 years of work. I've been working since 1973. Holy cow, that's 50 years of work. Wow. I shouldn't say that. That's 49 years of work because I retired last year. Okay, so I grew up in the 60s, 70s, and 80s. We went to work first thing Monday morning. Friday afternoon, we got our paycheck. Well, that's the exact same way I want to do my investing. I want to do all my trading on a Monday, and I want to collect all my money on a Friday. So that's why I do weekly options. As you see these numbers here, 20 September, that's today. All these options expire today. 27 September, all these options here are going to expire next Friday. 4 October, that's 2 Fridays away. 11 October, that's 3 Fridays away. 18 October, 4 Fridays away. Every single Friday there's options that expire. So why not jump in first thing Monday morning, make a few trades. It takes 10 or 15 minutes. It's really not that difficult. Remember, it was created for a 9-year-old. It had to be simple, safe, predictable, and consistent, and no way that she could lose. What was your field of work? Believe it or not, you guys might have a hard time believing this. I used to be a CEO. Okay? I was the owner of a company. I had 26 employees at the peak of my business. Yes, I no longer have that business. The wife left with the guy across the street, so here I am. All right, how to sold that? I sold that back in 2003. Did a lot of nothing for like 10 years. I spent all that money and I just traveled the world. Now, here I am, retired, sharing this information with you good people. Sorry, that's my tea with ginger and honey. Good for my throat. I'm not used to talking so much. Okay, let's go look at more of these questions before we jump into those stock. Holy cow, 97 questions. Let's see what I can do. 97. Hey, Bluebell, how are you? Uh-oh, I missed a whole bunch. CINF, somebody wants to take a look at CINF. All right, what company is that one? Well, AGNC, it's AGNC Invert Corporation REIT. Yeah, all right, it is what it is. All right, Chris, Cincinnati Financial, I'm pretty sure those are a monthly. Yeah, Cincinnati Financial is a monthly. And sorry, I just don't do monthlies. Hey, Andrea, how are you this evening? I already talked to you today, so I know you're doing well. It's a good thing. But Chris, sorry about that. CINF, Cincinnati Financial, they're a monthly optionable stock. What does that mean? That means they offer options only once a month. Okay, there's only 12 months in the year, which means I can only do a covered call once a month. That's 12 times a year. Those numbers just don't work. Okay, they just don't work, so I don't do them. Sorry, but I do like AAP, which is Advanced Auto Parts. See, Advanced Auto Parts, it's a weekly. See, I can do one every single week. That's 52 times a year. Cincinnati Financial, I can only do it once a month. That's only 12 times a year. So ask yourself a question. Would I like to get 12 checks a year, or would I like to get 52 checks a year? I mean, think about it. Because we're invested in dividend stocks, but we're invested in dividend stocks that have weekly options that allows me to collect a check every 7 days or 52 times a year. How much weekly do you make? I make about 1% per week. Now, I know that doesn't mean anything to you at the moment, Rick, but think about it. Whatever you have in your investment portfolio, let's say hypothetically you have 100,000. If you have 100,000 in your portfolio, 1% a week is over 50,000 a year. If you have 20,000 in your portfolio, well, that's 10,000 a year. If you have 15,000 in your portfolio, well, that's 7,500 a year. Okay? 1% a week comes to roughly 50% per year. So let's take a look at AAP, Advanced Auto Parts. As always, high, low, where was it, where is it, what direction is it going? She went up, now she's coming back down. Here's the bottom right here, which was a couple of weeks ago. Now, I love it when it hits a bottom. Now, some of you guys might think, oh, it's terrible, it's at the bottom. Well, if you're going to make your money in the stock market, you're going to make it buying low and selling high. You don't make any money buying high and selling low. That doesn't work. Sorry. Okay? So, okay, it's currently at $40.99. See the last traded price, $40.99. And this doesn't look good. Now, the reason why this doesn't look good, Andrea, take a look. The last trade, $40.99. The bid, $40.82. That's lower. $40.90 is the ask. They are both lower. They are both lower than the last traded price. When that happens, the market maker is usually pushing the price down. Okay, when the bid and the ask are higher than the last traded price, the market maker is trying to lift it up. Okay, just a little clue. It's not guaranteed, but it is a clue. All right. The 40.90, we'd be looking at the 41s. The 41s, are you checking out this price? 93 cents a share. Now, that may not mean anything to you if you're new here, but at 93 cents a share on a $41 stock, that is over 2%. What does 2% mean? Well, 2% a week is over 100% a year. If you can do 2% every single week, that's over 100% return on your money. Chris Lee, how you doing? But anyway, Andrea, let's take a look at the last 30 days. Okay, here's the last 30 days right here. 30 days ago, we were up at 62. Okay, see it right here, up at 62? Let me come over to this side. 62, and from there, she gaps all the way down to 48. She goes from 62 to 48 overnight. I always tell people, if you don't grab your profits, let's go back a little bit so if you can see it. Okay, this is 60 days ago, which is 2 months ago. Okay, 2 months ago we're at 60. She goes up, pulls back. Okay, here's your 60-day bottom. Okay, from there she shoots up to 62. All right, now from the bottom here to the top here, if you don't take your profits, what is going to happen next? See that? The market maker took away your profits. If you don't take your profits, you will see the market maker taking it away from you. Okay? And here's the thing when it comes to profits. Two things. One, nobody ever went broke taking profits. So if you're here at 57, okay, she shoots on up, and now she's at 62. See, from that bottom right there, she shoots up. If you don't take your profits, market maker takes it away from you, way down here. Just took it away. Good. He can do that. That's what the market maker does. If you sell it at a loss, well, that's your own damn fault. So remember the 5 rules. Never buy something you don't understand, okay? Always buy it as if you want to hold it forever. Okay, that's number one. Number two, never sell at a loss. It defeats the purpose. Number three, make sure the company is consistently profitable. How you do that is totally up to you. Me personally, I like 20 years of increased dividends. Because if a dividend is a portion of the profits paid back to the investors, that's me and you. Once we buy the stocks, we become investors. Okay, let me a second. If the dividend consistently increases, well, logic, reason, and common sense tells me, well, they're consistently profitable. I could read the annual reports, but the annual reports can tell me the exact same thing. If they're consistently profitable, well, the dividends, the share to the profits to the investors increases every single year. Well, they got to be profitable. That's what I like. Okay. Rule number 4, make sure I have weekly options because I can get cash flow. And 5, make sure the numbers work. What are the numbers? Well, what am I buying it for? What am I selling it for? And then what premium am I collecting? Well, that premium right there is more than 2% of the purchase price. Okay, the purchase price is right here, $40.90. The closest strike price, the 41. The 41 at this moment in time is selling for 93 cents a share. 93 cents a share. Let's bring up my calculator just so I can prove the point for those naysayers. There's always naysayers out there. All right. 93 cents a share divided by the purchase price, $40.90. $40.90. It comes to a grand total of 2.27%. That's 2.25%. Can you imagine getting 2.25% every single week? Now, you may think this is a difficult or time-consuming. No, it's not. Anytime you've seen one of my videos, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Now, for those of you who don't know who the 10-Minute Trader is, that happens to be my little princess. When she was 9, I think I told you this, okay, all my social media, or most of my social media, let's go on over to YouTube so I can show you who the princess is. We're going to look at the videos. Then we want to look at the oldest videos. And here she is.
Hi, I'm JC, and as you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose.
That's me. 12 years ago. Look how much hair I had back then. Holy cow, I miss those days. Anyway, funny thing is, it's funny, watch this. Oh, you can't see it, damn it. That t-shirt, I still have that t-shirt. It's 15 years old now. It has a little bit of holes in it because it's 15 years old. Anyway, doing basically the exact same thing we were doing then. Let's get out of there. Okay. Back to here we go. So let's take some more questions. Holy cow, I got 100 questions. Going up to questions. What about ticker symbol energy transfer? Woohoo! Let's take a look at energy transfer, ET. Now, please don't think I'm ignoring your questions. I get 6 cameras going, 1, 2, 3, 4, 5, 6, which means I got a whole bunch of questions from here, and here. So keeping up with all the questions is a little bit challenging. I'm not ignoring them. I'm just going through them one at a time. All right, so energy transfer. I'm not 100%. It's okay. It's not one of them I'll just jump into, but here we go. Here's our high, here's our low, here's where it was, here's where it is, here's the direction. Look at this. It's going sideways for a little bit. Now she's going to the upside. Okay, great. Energy transfer. Let's take a look. At this moment in time, it's at $16.20. I can buy it at $16.22 first thing Monday. Okay, so the 1650s are going for, oh, hell no. Hell no. 2 cents, yeah, no thanks. Energy transfer. Sometimes the numbers are good, sometimes they're not. Now, if you like energy transfer, wait until Monday. All these numbers will change. but the math is still the same. What is the current price? What is the closest strike price when doing a covered call, the closest strike price? And what is it selling for? Okay? Now, if what it's selling for is more than 1%, great, it's a good deal. If the chart works out okay. I'm not even going to bother with the chart on this one because the numbers are crap, in my humble opinion. Sorry. Sometimes energy transfer works out, sometimes it doesn't. You're going to find that with a lot of companies. Some days they'll give good premiums, other days they won't. If we drop below 50, we're going to reboot. Just to let you know. So like, comment, share, and get the audience up. Uh-oh, it's dropping. And it's a Friday night, so I'm not, too concerned. Why 2 weeks? Darbenly, why 2 weeks? Well, because I want to give the stock an opportunity to move. I'm like, think about it. Hey, I'm from Cincinnati, Ohio. I actually been there. I didn't see, there it is. Below 50, we're going to reboot, so you guys just hang out, chill, jump back in a minute or two when we reboot. There we go. And now, come on. Good morning to you too. Uh-oh. There we go. All right, we're going to try this one more time. All right, we're going to try this one more time. Let's see what it looks like. Let's go here. Let's go there. Let's go there. All right, we're going to try this again. Hopefully we get more than 50 people. That's just ridiculous, even for a Friday. Tonkatuba, how are you doing over there in Instagram world? Susie broke it. Susan Amy, holy shit, honey, how are you? Drop me a DM. It'd be great to talk to you and the hubby and how are the kids? You got to be a grandmother by now. I'm a grandfather. Can you believe that? Rocco made me a grandfather. He's awesome though. He's cool. All right, so we're back again. I want to apologize for that brief little interruption because I like the numbers to be higher than 50. 50 is a little silly on a Friday night. Paramount cut their dividends. Oh no. Gallant, how are you? Gallant, Paramount cut their dividends, but I still have some Paramount, so it's still on my list. All right, so let's take a quick look at Paramount, P-A-R-A, see what it looks like. All right, first thing I always want to see is where's the high? Where's the low? Where was it a year ago? Where is it now? And which direction is it going? Look at that direction going this way. Now, it's turning right here. I want to take a closer look at that. But before I do, let's take a look at the numbers. I can buy it at 10.39. The 10.50 is going for 5 cents. Nope. No, thank you. NDRA. What the heck is NDRA? Wiz the Trader. NDRA. Yeah, no options, and it's 19 cents. How could it possibly have 20 years of increased dividends? Not great for next week. Nope, not at all. Mark, he wants to take a look at Walgreens. I love Walgreens, WB8. Okay, Walgreens. Ooh, it dropped again today. Bummer, bummer, bummer. Now, let's take a quick look at Walgreens. Here's our high, here's our low. Here's where it was, here's where it is, here's the direction it's currently going. Now we know that Walgreens is going to be a little finicky for the next couple of years because they're trying to get rid of all the bleeds. What does that mean? They're trying to get rid of the stores that aren't performing. Don't know if you saw this. Good evening, James. Had a great week because of you, thank you. Boop. Tom Pell, glad to hear it. Good for you. All right. Van Dutch, how are you doing? Alfredo. ¿Qué pasa, Alfredo? ¿Cómo está? Son of a hutch. That's funny. Samron here. What was the stock that had a 93 premium? Ooh, I don't know. I forget. I'm old. I forget things. If I don't write it down, I forget. I don't know. Sorry. It is what it is. All right, so Walgreens. High, low, blah, blah, blah. We did all that. Let's take a look at the last 30 days to get an idea of where we think it might be going. All right, here's the last 30 days. Here's our high, $10.80. Drops all the way down to here. What is that? That is 846. Check that out. 846 is the low. Okay, she went up, pulled back, up, pulled back. Now we're pulling back right now. We're at 8, what is that? 871. Okay, so 871. What, ooh, Siri isn't bad. Yep, Galant, I actually bought some Siri this morning because it looked so good for next week. All right, we're going to take a look at Siri next. Oh, I'll put it on the list. Siri. Okay. Did you get into Mara? Hellraiser, how are you? I think I do have it. Hold on a second. Can you explain the candles, please? Fahad, how are you? The candles, I'll get to that in a second. Let's finish up with WBA, Walgreens. Okay, currently the price is $8.74. The 9s are going for 11 cents. Well, 11 cents is well over 1% for the 9s. Now, we already looked at Marathon. Okay, we're going to look at Siri next. But Fahad wanted to have some explanation on the candlesticks. Well, I think I go through this like once or twice a week. Okay, what do the candlesticks? Okay, candlesticks is just a basic way of seeing the highs and lows in the stock movement for the day. All right, so here's your candlestick. You notice you have a wick at each end, the green and the blue and the red. Okay, there's a wick at each end. Okay, so the top of the wick is the high of the day. The bottom of the wick is the low of the day. Now, if you look at this right here where it says R, R means the range. How much distance did it go from the high to the low? So if I move over to here, this one right here, this green one, the range was 46 cents. Well, that's all it moved, 46 cents. This day over here, well, it only moved 28 cents, okay? From the difference between the high and the low. All right. So the top of the wick is the high, bottom of the wick is the low. On the green, the bottom horizontal line is the opening price of the day. The top horizontal line on the green is the closing price of the day. So you have the open, you have the close, you have the high, you have the low, and then you have the volume, how many shares traded. Well, today, going over this side, 48.9 million shares of Walgreens traded today. That's a lot, 48 million shares. We already know about all of this. Can you explain deeper stuff? All right, Marshall, some people didn't know this. So hold on a second. Okay. Now, that's the candles. You also have the opportunity to do, a bar chart. Okay? Bar chart, basically the same thing. The top of the wick is the high, bottom of the wick is the low. The horizontal line on the left is the opening price. The horizontal line on the right is the closing price. Okay, both red and green, both the same. Okay, high, low, open, close, volume. Those are the 5 numbers you need to know. High, low, open, close, volume. All right, so let's go back to where we were. Okay. All right, so here we are. Siri isn't bad. Walgreens, we already looked at Walgreens. Let's take a look at Siri, which is S-I-R-I, Siri. I also picked up some Siri this morning, just in case you guys wanted to know. Siri, first. How do I know which one is waterfall, like D.A. Selwyn? All right, I can't help you out with that one. I'm not quite sure what you mean by waterfall. Sorry. Okay, because certain people use certain terminology and it's not widely known. Okay, it's like we up in New England, we say cool beans. A lot of people say, what the hell does that mean? Or wicked pissa. You know, we all know what it means, but some people down here in Florida, they have no clue. People in California, yo, dude. Yeah, okay, I have no idea what waterfall means. All right, so Siri, here's your high, here's your low, here's where it was, here's where it is. Look at the direction it's currently going, and it's bouncing off the bottom right here. All right, a year ago, and before we go there, look at the price. 25.17. The closest one is going to be the 25, which is going for 62. The 25.50 is going for 34. Both of those are offering over 1%. Great. That's what I'm looking for. Over 1%. That works for me. But that's only part of the equation. The numbers is only part of the equation. The chart is like the final piece. Well, because it might not be the right time to buy. Now, what do I mean by the right time to buy? Well, I sure don't want to buy it at the high of the year, and I don't want to buy it at the low of the year. What I want to buy it is when it hits the bottom, turns around, and starts its way back up again. So this is the 1 year chart. You can't really see it. Okay? 6 months, you can't really see it. Here's the high, here's the low, here's where it was, here's where it is, but you can get a better look at it the past couple of weeks right there. So let's zoom in a little closer to the last 30 days. I love the last 30 days because it gives me an idea of where it's going next. Not guaranteed, but it gives me a good idea of where it's going next. Okay, so last 30 days, here we go. 30 days ago today, we're at 31. Okay, 1 day later, here's our high at 36. From the high of 36, she drops, retraces, drops, retraces, drops. Now she's coming back up again. Or you can do it like they do in elementary school. Up, down, up, down, up, down, up. Okay, here's the bottom right there. Monday. Monday was the absolute bottom for Siri. Now you're going to make your money buying low and selling high. Well, here's the bottom right here. 1, 2, 3, 4. 4 days to the upside. Great. We're sitting at 24.95, so I can buy it at 25. The 25s for next week are going for 62. That's a nice price. The 25.50s are going for 34. The 26s are even going for 29. Well, I'm looking for the 1%. Look, and she's bouncing off this bottom. So where do you think it's going next? Well, logic will tell me it's going to the upside. Because, you know, up, down, up, down, up, down, up. It's really that simple. Now, when I say it was created for a 9-year-old, it had to be simple, safe, predictable, consistent, and no way that she could lose. So the number one question you need to ask yourself before you buy anything, do I like Siri? And do I like Siri at this current price? That's a very important question. If you do not like it, if you do not understand it, don't buy it. If it doesn't make sense, if the numbers don't work, what the hell are you buying it for? Okay, we're all at some point in time going to rely on our retirement in order to live comfortably. Because we as humans are the only species on this planet that's got to pay to live here. And how well you want to live is going to be greatly influenced by how much money you have available. So, I've been working since 1973, long time. Now, I retired last year, so I don't have to work anymore. The amount of money that I have, I get a 1% per week on it. Is it free? No, I actually have to trade my time for it. So it takes me 10 to 15 minutes to trade my own account. Now I have 6 different accounts that I'm in control of. Okay? I share 3 of them with you guys publicly. So I don't hide anything. You can actually see all my trades all the way back to January. Okay, right here, the 10-minute trader. You get these are all my trades. Click on any single one. Here they are right here. Dell, Kohl's, MPW, Dell, Walgreens. Okay, that is week number 27. What did I make in week 27? I made, oh, look at that, 3.37% in that one account. This account over here is only 1.7. Is what it is. But they go all the way back to the first week of January. Okay, first week of January, right there. 2.12, 1.3, 2.43. Was that 2? What is that one? 2.99. Okay, they're all there, every single trade I made. You want to see what I'm looking at? There they are, right there. I don't hide anything. All right, so that being said, let's go back to here. All right, let's go up. Siri, I like Siri. I actually bought some Siri today for next week. And I believe I got a nice, I forget what it was. What's good to invest for retirement? Chris. All right, Chris 71. That's an interesting question. I can't really tell you what to buy, but I can tell you at this moment in time. As a matter of fact, for the fun of it, let's do it. Let's go on over to FinViz. F-I-N-V-I-Z. FinViz. Here we go. FinViz. That's Webull. I don't want that one. I want Finville right here. Now, FinViz tells me, James, which trade to invest? Okay, yeah. Just sit, chill, hang out, watch. Okay, I want to look at the screener. Now, FinViz is a financial visualization website. Helps you figure out what stocks are what. But what I'm looking for is this number right here. 9,676. Okay, so they got added 32 more companies. They added 32 more companies since the beginning of the week. 9,676 companies that you can invest in at any time at all. Any day of the week. That's a lot to choose from. But here's the thing. There's only 2 types of companies. Because I lost in gold too much. Fahad, I can't help you out there, dude. Okay, gold is not an investment. Gold is a storage of wealth. Okay, it's basically a dust collector until you decide to cash it in. I don't buy gold because I can't get cash flow from it. All right, so as I was saying, 9,676 companies, only 2 different types. Ones that pay dividends, that's sharing their profits, and ones that take all the profits, invest it back for capital growth. That is the big question when you walk into the what do you call it? Hold on. No, I don't need help. I want to learn. Well, right. Hang out, chill, relax. I've been here since the beginning of January. Okay, I've already committed myself to be here every single night till the end of the year. Think about this. We're almost into the end of September. I have only missed 2 days. Okay, one day I was sick as a dog. It just wasn't happening. The second day I had to rush somebody to the emergency room because they were sick as a dog. But other than that, every single night, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, 7 days a week, 2.5 hours every single night just to help you guys out. Why? Because I feel compelled to share my knowledge. I don't want everything up here to go to the wayside. And also, I am creating a document series for my children and my grandchildren. Now, I only have one grandchild at the moment. He's 4 years old. I'm hoping at some point in time he can go back and look at all these videos and, hey, there's Papa G. Okay, yep, that's me, Papa G. Okay, so let's keep on going. So, you have 2 different companies. One shares their profits, one does not share their profits. No matter how you want to look at it. Capital growth, income. You can have them both, but ask yourself the question, which one's more important? Capital growth or income? I'm retired, so for me, it's 100% income. I don't do any capital growth whatsoever. The longest I've ever held anything was 9 months, and I didn't do it because I wanted to. I bought it, it dropped, it took 9 months for it to turn around, come back out before I can make a profit off of it. Remember rule 1? Never buy something you don't understand. Well, Kimberly-Clark, I knew who they were. Good company, great company. Dividend King, been around for almost 100 years and consistently increased their dividends for more than 5 decades. Yeah, that's all stocks do. They go up, they go down. Kimberly-Clark just so happened to go down. I held it for 9 months. I got 3 dividends and over 20 premiums. I made a nice amount of money off of it, even though it was dropping. Anyway, so 9,676. That's a lot. First thing I want to do is this box right here, dividend yield. Okay, what that's going to do is once you click on that, it's going to separate all the companies that pay dividends or share their profits and the companies that do not, capital growth. All right, so let's say I want anything over 4% yield. Well, lo and behold, look, 1,792 different companies. That's still way too much for me to figure out. All right, so I'm going to come over to the other side right here. Remember I told you I want weekly options? Weekly options allows me weekly cash flow. That's what I'm looking for. If I click on this, on options, and I want to write yes, optionable, now look what we got. 940, is that right? 940? Yeah, that's right, 941 companies. That's it. 941 companies have a yield over 4% and have options. Now, it doesn't tell me whether they are weekly options or monthly options because I don't do monthly options. It's just not worth it for me. If I'm going to have my time and my money and I'm going to invest in something, I want to make sure I get paid weekly. Okay, I grew up in the 60s, 70s, and 80s. I went to work 8 o'clock in the morning. 4 or 5 o'clock on Friday afternoon, I got my paycheck. I'm used to it. It's what I like. Call me old-fashioned. I really honestly don't care. I don't care. I want to get paid weekly. That's just me. And I have enough money to get paid weekly 1% and it takes care of my bills. I'm perfectly fine with it. Fred, how you doing? Mark, glad you're here. Kristen, or is it Kirsten? Sorry, Kirsten. Eli, Christopher, Greg, Mark. All these people saying hi. 30 RSI. Sorry, Mr. Bubble, I don't do the RSI. Okay, remember what I told you? Mr. Bubble, it had to be simple, safe, predictable, consistent, blah, 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 all that kind of nice, neat, fun stuff. When I say simple, I want you to look at your child or your grandchild who's 9 years old and say, hey, how would you like to learn about relative strength index? Yeah, no, that just doesn't work. Okay? What does work? Let's get out of there. Let's get out of there. Let's go out to here. Let's go right to here. What does work when you say to a 9-year-old, look, these are the stocks we're looking at this week. Right here. AGNC, Mendeley's, John Deere, Alley Bank, Humana, Line, USB, Comcast, Cisco, Bristol Myers Squibb, JP Morgan, NTAB. That's just this week. Those are the only things I want to take a look at. That's it. There's over 9,000 stocks. Don't really care. These are the only ones you're looking at this week. Only ones. You know how easy that is for a 9-year-old to figure out? Well, what's today's date? That's easy. Everybody knows what today's date is, especially a 9-year-old. Great. All right, so what are we looking at? Well, we're looking at AGNC, John Deere, Humana, Alley, Mendeley's, blah, blah, blah. Those are the only ones we're looking at. We're not looking at APA. We're not looking at Lowe's. We're not looking at Texas Instruments. We're not looking at Colgate Palmolive. We're not looking at the Gap, Microsoft. We're not looking at MasterCard, Visa. We're not looking at anything but these right here. That is it. It is actually that simple. If it ain't broke, don't fix it. If I'm making 1% a week, why do I want to change it? Relative strength index is nothing but confusing to a 9-year-old. So why would I teach her that? Now I'm teaching the exact same thing I taught my daughter with a few minor twists because things have changed in the last 12 years. All right? So certain things I don't teach her. I don't teach her about the Greeks. She doesn't need to know about the delta, the vega, the rho, and the, what do you call it, theta. She doesn't need to know about those. She doesn't need to know about implied volatility. She doesn't need to know about the wheel strategy. She doesn't need to know about anything except for these are the stocks we're looking at. Great. Let's pull one up. AGNC. Didn't we just look at AGNC? I think we did. AGNC. Here we go. First thing, it's not difficult to look at. I can get a third grader. Where's the high? There it is. Where's the low? There it is. Okay. If the far left is a year ago, great. Where was it a year ago? Right there. Okay. If today is right here, well, where's today? Right here. What direction is it going? Well, here's the bottom here. Look at this. It's going up. I can get a third grader to say, oh, look, it's going up. Don't make it confusing. Simple, safe, predictable, consistent. That was the strategy. If it's easy, a 9-year-old can do it. That's who it was created for. All right, let's keep on moving. More questions. Oh, I'm down to 45 questions. Cool beans. And look at that. We're up to 162. That's better than 50. Okay. No nickname. The Candlestick Course book by Steve Nilsson will help whoever asked. Okay, no nickname. It's really not that difficult. I mean, that's all you need to know. Okay? The top of the wick is the high of the day. The bottom of the wick is the low of the day. Okay? The horizontal lines represent the opening and the close. That's it. What do you need to read a book for? That's it. Top of the wick is the high. Bottom of the wick is the low. The horizontal lines on a green day, the bottom horizontal line is the opening. Top horizontal line is the close. On a red day, top horizontal line is the opening. Bottom horizontal line is the close. Why do you need a book? It's actually that simple. Okay, when I was growing up, when I was in high school back in the 80s, they had what's called Cliff Notes. Kind of like a cheat sheet. Why do we want to read the whole book? 300-400 pages. Well, we can leave Cliff Notes. It's only 50 pages. Gives us the whole premise of the whole book. Leaves out all that fluff. Bostonian, how are you? Spanky. I love that name. That's a cool name. Mr. Bubble, 6-month scale. Dude, seriously. 86, how you doing today? Uh-oh, I missed some questions. Here we go. Eric, INSG, bought 1121. What's your thoughts? INSG. Yeah, no. That was quick, wasn't it? I told you I don't do monthlies. They just don't pay. Let's go through an example and see. At the moment, this one's at 1769. Great. Well, the closest strike price right here. Okay. 1769. The closest strike price is going to be the 18. The 18 is selling for $1.40. Wow. I might be wrong. $1.40. All right, so $1.40 is more than 1% on 18. Let's actually find out exactly what it is. $1.40 divided by 18 equals 7%. Holy shit, 7% for a month. 7 times 2, that's 60%. Ooh, nice. However, it's going to be a no at this moment because it's the high of the year. Hold on, I've never heard of it, so let's see what the dividends look like. Because to me, dividends are extremely important. INSG. Yeah, that's probably why the premiums are so high. There are no dividends in the selected time period. Sorry, Eric. No dividends, no thank you. Absolute worst case scenario, if the stock goes down, what do I get? Nothing. And it only has monthly options, which means I can only get an option once a month. What do I think about Big Lots stock future? Philip, I need this ticker symbol. I've never heard of, well, I know who Big Lots are. There's a couple of them right down the street, but I don't know what their ticker symbol is, so I can't give you my honest opinion of them. All right. Let's go back to here. Here we go. Next. Wow. This is your legacy. Absolutely right. It is. Eric, I looked at INSG. Philip, didn't they file Chapter 11? I don't know. Bo! I sent a request to join as a guest if you want to have a brief chat. Cool. Bo, I need that again. Where is it? Where is it? Reply to Bo. Okay, Bo, send me another request. That way, if I see it, I can actually accept it. All right, let's go. Where were we? There you go. You want something you invest in to share their profits, or it's risky. Yeah. Think about it. Okay, Big Rob, think about it. If you're going to invest your money, okay? If you're going to invest your money, don't you want to be reassured that the company is profitable? Well, yeah. How do you figure that out? Well, you figure that out by looking at the cash flow. You look at that. You figure that out by looking at the the earnings reports and the quarterly reports and the annual reports. And you read all that information. Great, that's how you find out. Or you can go right to the dividends and see how often they've increased. 9 months of wasted opportunity. Haas and Pfeffer, I have no idea what you're talking about. I'd like to hear more. Rich Bruner, yes, they did. I'm just curious if the stock will go away or go up. Yeah, no thanks. Encourage more people to share. Well, we're 140. I don't mind that. What site is that? It's not a site. This is actually a trading platform called Think or Swim. It's free to, oh my goodness, Trisha Walls. Trisha, how are you today? I haven't seen you, hold on a second, since the last class reunion. How you doing? Alrighty. Anyway, let me keep progressing. At this point, I think a put on EL, Estee Lauder. Ooh, Estee Lauder. Let's take a look at that one. Estee Lauder. Why would you put a put on Estee Lauder? Okay. Estee Lauder had their bottom just recently. Check that out. There's the bottom, 9/11. She went up, she pulled back, a put. I don't know. I'd like to hear your thoughts on that one. Okay. Josh, all this is over my head, but I want to start trading confidently. How do you suggest I start? Josh, you know, there are hundreds upon hundreds of videos over on YouTube where you can learn. Now, the trading strategy I'm teaching here was created for my 9-year-old daughter. It had to be simple, safe, predictable, consistent, blah, blah, all that kind of nice, neat, fun stuff. So, the safest trading strategy is what's called a covered call. That's where you buy the stock and you sell somebody the rights to buy it from you. Let me give you a quick example. All right, we'll take a look at Estee Lauder. Why not? Estee Lauder currently at this moment in time is at $85.25. If you like Estee Lauder. Now, if I want to sell it at $85, I can get $1.50 per share. Now, if I'm selling it at $85, well, right off the bat, you're looking at, you're losing 25 cents. Well, you're absolutely right, I am. But at $85.25, and I sell it at $85, you take the 25 off that, I'm still making $1.25. $1.25 is well over 1%. Now, if you get 1% every single week, that's over 50% per year. But it always comes down to, do I like Estee Lauder? Okay? Or Macy's, or Microsoft, or ExxonMobil, or Genuine Parts Corporation. There's over 9,000 different companies you can choose from any single day. So always remember rule number 1, never buy something you don't understand. If you don't know who they are, what they do, how profitable they are, don't buy it. Never buy something you don't understand. Also, buy it as if you're going to hold it for the rest of your life, because this is your money. And nobody has more interest in your money than you do. Or your ex-wife, your ex-husband. But you know what I mean. It's your money, you worked for it, you invested, you take the profits. If you give it to a money manager or an investment banker, they're going to put it in whatever they get the highest commission on, and they do not have your best interest in mind. Think about it. Most of them will give you a 4% draw on your money. At 4%, how much do you need to have invested? Well, $1 million at 4%, that's only $40,000 a year. In this strategy here, at 1% a week, you only need $80,000 to get $40,000 a year. And what's easier to get, 80,000 or 1 million? Think about it. It's all a numbers game. All right. Justin Feder. So you're making 52% a year? No, I didn't say that. I said I average 1% a week. So you kind of have an interest to know what I'm making. All right, so here we go. Right here, my webpage, which I share with everyone freely. These are the trades I made all year long. Now, I'm going all the way up to the top because up at the top has the running tally. Okay, the running tally at this moment in time. Remember I showed you the three accounts I share with you? Okay, account number 1. Started off at the beginning of the year, 117,000. I added another 21,000 when I changed from one account to another, Joe Sullivan, how are you today? All right, so currently at 1% per week, it should be around 38% because we're in week number 38. We just finished week 38 for the year. There's 52 weeks in the year. We all know that. We just finished week 38. However, this account's already up over 50% so far. This account here started out with 100,000 cash and 100,000 in margin. I suggest you do not do a margin account until you understand the risks. There are a lot of risks in margin account. But the margin account, 100,000 cash, 100,000 margin, this one is up to 70% already. 70% so far, and we still have, I don't know, the whole quarter to go. 13 more weeks, 14 more weeks to go. And last account over here started out 2 months ago with just $100,000. We're up to 10% already in 2 months. Okay, so I share every single one of my trades. Okay? Win, Kohl's, Walgreens, MPW, Bitto, Win, Bitto, Kohl's. Okay, they're all there. Every single trade I've done so far this year is there. Well, not every single one because that's week 35. I got 2 weeks I haven't uploaded yet. But yeah, I make over 1% per week on average. Okay, some weeks 2.8, 3.1, 2.8, 3.3, 2.2, 5.2, 3.7, 1.5. Oh, look at this, negative 0.15. So I actually lost on this week right here. Okay, I show you the winners and the losers. I got nothing to hide. Why do I care what you think? Okay, I'm sharing it not with you. I'm sharing it, documenting it for my grandchildren, which most of them don't even exist yet. But at some time, at one point in my life, I'm not going to be here anymore. And I would like my grandchildren to see how the grandpa started his empire, because this is my legacy. This is what I'm leaving to my children and my grandchildren. They may not be interested in it now, but the interesting thing about YouTube, YouTube will keep the videos for decades. I get videos going all the way back into the early 2000s that I did. Anyway, let's keep on moving forward. Alrighty, so back to here. Gamer Thinker swims the platform. You didn't answer me about whether you got into marathon. Well, I didn't get any new positions in marathon. I don't think I have marathon in this account. Nope. Marathon in this account. Yep, here's marathon right here. So I actually have marathon in this account here. I got 4,000 shares at $19.25. Okay, I sold the 14s for $2 a share. Okay, but I didn't buy it this week. I bought 2,000 shares of the end of July, and in the middle of August, I bought another 2,000 shares. So I've had marathon for a while. Not that I want to keep it. It just so happens to keep missing my strike price. All right, so that's that account. This one here. I don't think there's marathon in this one. Yes, there is. There's marathon in this one also. Okay, so in this one, marathon, I got 5,000 shares at $18.13, and I sold the 15s for $1.30. Nice. I like that. So yeah, I do have marathon, but I didn't buy it this week. All right, so let's keep going. Ooh, Winner 86 wants to take a look at Micron. All right, well, let's take a look at it. MU. Here we go. All right, Micron Technologies. First thing, high, low, where was it, where is it, what direction is it going? Okay, currently it's at $90.90. So the closest strike price is going to be the 91. Take a look at that price right there, $4.40. That's a 4% return for the week. But just because the numbers look good, what's the chart telling me? Because remember, a picture paints 1,000 words. Okay, high, low, was, is, direction it's going. So let's take a closer look. A year ago, Micron Technologies at 71. We bottomed out the end of October at 64.04. Well, here's the top right here. The top right here, we have a double top at 157.54, and that was back in June. Take a look at that. From the high of the year, she stair steps down. Look. Down, up, down, up, down, up, down. Now she's going back up again. See, here's the bottom right there. I want to zoom in and take a look at that last 30 days. Because the last 30 days is going to give me an idea of where it might be by next Friday. Now, y'all remember the teeter-totter or the seesaw. It goes up, down, up, down. That's all stocks do. Well, this one here, down, up, down, up, down, up, down, up, down. Now it's going to the upside. Well, how high is it going to go? Well, the question is, that's not the only question you need to ask. Here's your bottom right here. From the bottom here, well, it's definitely going to the upside. All right? It's currently at $90.90. Well, the 91 is the closest. And it's paying $4.40. That's well over 1%. That's like a 4% trade. How would you like to get 4% every single week? You're not going to get it every week. I hardly ever get 4% a week. I average 1. And I'm okay with averaging 1%. Because 1% a week gives me enough money to live comfortably. Okay? I've passed the point of greed. Greed, I am past it. I don't need it anymore. I would rather hang out with my grandson, go swimming, and play. And just be a child all over again with my grandson. Fill him up with sugar, send him back to the parents, and laugh my ass off. That's my goal in life. Oh, Chris wants to take a look at the Qs. Chris Marlowe, the Qs, huh? And then J-A-H, wants to look at Walmart. All right. Well, let's look at the Qs first. Q, Q, Q. No, no, no. Let me tell you why I don't like the Qs. Q, Q, Q. There we go. Now, the Qs at this moment in time are at 482. 482.28 is what I can buy it for. The 482s are going for 390. Okay, that's not 1%. It's not even close. Okay, that's one reason. I ain't done yet. Hold on. So let's go over to Yahoo Finance and find out a little bit more details on the Qs. Okay? Now, I'm not going to go back too far with the Qs because we know that goes back like forever. Let's go back to the 90s. All right, I'll go back to 2003. All right, so we're going back to 2003. I want you to pay close attention to the dividends because the Qs give you dividends. All right. 2003, 1 cent. 2004, 38. 2005, 4. 2005, 10. 3, 3, 2, 5, 3, 4, 3, 5, 3, 3, 3, 4, 5, 4, 7, 5, 9, 11, 8, 10, 16, 5, 11, 14, 20, 37, 16. Do you notice that it goes up and down, up and down, up and down? No consistency whatsoever. Remember my 5 criteria. Simple, safe, predictable, consistent. There's no consistency here with the Qs. But wait, if you order now, I'll show you how really shitty it can be. So let's go over to the summary. Summary gives you an idea of what your rate of return is going to be with the Qs. You see this? Other side, hold on. 0.61. You're investing your money at $480 a share and you're getting 0.61. That's just a tiny bit over 0.5% per year. The inflation alone is going to kill you on this piece of crap, but that's my only opinion. Okay, but the numbers don't lie. If I'm investing in this, what's my yield for the year? 0.61. More power to you, brother. You like the Qs? Have at it. Not me, no thanks. Okay, there are too many stocks out there. Now, a lot of people will tell you, buy the Qs. They're safe. A wide variety of all of those stocks. Yeah, you get a wide variety of all those stocks, but look at the return you're getting. 0.6. Yeah, no thanks. No thanks. All right, that being said, what's next? Wally World. J-A-H wants to take a look at Wally World. WMT. All right, WMT is going to be a no for this week. The reason it's going to be a no for this week, look at where the stock price is at the moment. All right, you're going to make most of your money buying low, selling high, not buying high, waiting for it to go higher. I don't play that game. I wait for it to pull back. Look, you don't think it pulls back? Look at this. Down, up, 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 down, up. It's all it does. Up, down, up, down, up, down. The idea is buy low, sell high. I'm sure you've heard that thousands upon thousands upon thousands of times. Why the hell would I buy it high, where it is now? Look at all that space from here all the way down here. So whoever bought it back in December last year at 50 bucks, well, now it's at 80 bucks. That's a $30 increase. A $30 increase on a $50 stock, that's a 60% increase. If you think someone buying it here sees a 60% increase and they're not going to take that profit, yeah, you're sadly mistaken. You got people out here like me. You see a profit, take it. It ain't a profit until you take it. And nobody ever went broke taking profits. I love that one. Nobody ever went broke taking profits. Okay, Hellraiser, we already looked at Marathon. How about FedEx? Cork. Let's take a look at FedEx. I like FedEx. It is on my list. Ooh, check that out. You see that big, huge drop? I want to find out why that was. Then I want to take a look at it, and I want to follow it. I want to put it under a microscope. I want to find out where the bottom's going to be, where she's going to turn around, and then where she goes back up again. That's where I want to jump into it. FedEx has been around for a long time. I don't think it's going anywhere. But let's take a look at the numbers. Okay, right now it's at 254. The 255s are going for 330. That is well over 1%. I have no problem whatsoever buying FedEx. I like FedEx, but I'm not buying it until the timing is right. Well, what's the timing? Well, let's take a look. A year ago, FedEx is at 251. Bottomed out the end of October at 225. All right, she goes up, down, up, down, up, down. Look where we are now. Here's the high of the year here at 314. 314 is the high of the year. Down, up, down, up, down, up. Look at this. If you think this is not going to jump up tomorrow, Monday, okay, you're sadly mistaken. A big, huge drop like that, look at the volume. The volume is freaking crazy. Let's go check a look at something. Now, while we're here, can someone give me an idea why it dropped so much? Did they miss a beat? Did the earnings come out and it wasn't as glamorous as they wanted it to be? Why? The chart. Okay. Okay, here's a larger version of the chart. All right. We see where it was. Okay. Down, up, this big huge drop. Look at these blue bars down here. These blue bars down here represents the average daily volume. That's how many people jumping in, jumping out. All right, so let's take this, put it right there. So our average volume, how many shares trade on a daily basis, 1.4 million. Now, for those of you who don't know, let's go back here for a second. All right, now the difference between the bid and the ask. Now, for those of you who don't know, the bid is what you can sell it for. The ask is what you get to buy it for. The difference between the two is what is called the spread. The spread is what goes to the market maker. So the market maker, you can think of him as the store owner. The corner store, you know, the one right around the corner, Circle K, Quick Mart, 7-Eleven, whatever the corner store is. You think of the market maker as the gentleman or the gentle lady who owns that store. She buys a gallon of milk for $3, sells it to you for $3.50. What does she make off of it? She makes 50 cents. So what does the market maker make? The market maker makes on average between 2 and 4 cents a share. So let's go on the low side, 2 cents a share. 2 cents a share, 17 million shares traded today. Okay, on average, let's go back to where the chart was. On average, there's only 1.1 million shares traded a day. So let's do a little bit of fun math, just for the fun of it. So let's say, hypothetically speaking, the market maker gets 2 cents a share. Does he really care? Do you remember the movie Trading Places with Eddie Murphy and Dan Aykroyd? Okay, when they win those, what do you call those? Commodity brokers. Okay, when somebody buys, we make money. When somebody sells, we make money. Doesn't matter if the stock goes up or the stock goes down. The market maker makes 2 or 3 cents for every share that's traded. So if it's 1.1 million shares on average on a daily basis, well, let's figure it out. Multiplied by 1.1 million shares. Okay, there it is. So the market maker on average for FedEx makes $22,000 a day. Okay, you may think that's a lot, fine, but what happened today? Today, there was 17 million shares traded. So let's use the same numbers. Say 2 cents multiplied by 17 million. Okay, you see that number? $340,000. So let's say, hypothetically speaking, the reason for this side, the reason for this big gap down today was a bad earnings report. Okay, what does bad earnings report have to do with FedEx? Okay, the stock price is nothing more than the public's perception of the value. Nothing really to do with the company itself. Did you think the CEO called up, say, hey, our stock dropped, why don't you take a couple weeks off? Doesn't happen that way. People working in FedEx, they're still going to put their 40 hours in a week. Do they really care about the stock price? No. You know who does? The market maker. Because today, the market maker made $340,000, whereas yesterday, or the day before yesterday, he only made $22,000. Think about it. If you have access to a piece of paper saying, excuse me, ladies and gentlemen, our shareholders, our earnings is not as high as we thought they were. Now the market maker takes that information and he drops the price from 305 all the way down to 254. Okay, now instead of 1.1 million shares traded, there's 17 million. So the market maker took that information, manipulated, and now he gets $340,000 today. So in a couple of days, when it goes back to 1.1 million, see, this is the average movement, look at it, all the way back into July, average is about 1.1 million, yesterday and today, huge numbers. Okay, I don't trust the market maker as far as I can throw them. So do I pay attention to it? Yes and no. I don't pay attention to it as if I was going to sell it at a loss. No. Remember rule number 2? Never sell at a loss. It defeats the purpose. Okay, rule number 1, never buy something you don't understand. I understand FedEx, I do. But here's the thing with FedEx. You got this big drop right here. Great. Now I can buy it at 254, but I'm not going to buy it at 254, and here's the reason why. Let's go back to there. Let's go back to here. And let's go back to here. What I'm waiting for is this is the current 30-day bottom. I like 2 days to the upside. So Monday, is it going to be lower or is it going to be higher? I like 2 days to the upside before I jump in because I don't trust that that's the bottom because it could go lower. It could. I don't think it's going to go lower because it's FedEx. Okay, if you read the story about FedEx and you know what they do, well, you probably feel the same way. All right? But it's an opportunity because the big drop could be nothing more than the market maker manipulating the money, manipulating the numbers. And you think that's unheard of? You think that the people on Wall Street aren't dishonest and would never do something like that? Yeah, I got a bridge in Brooklyn to sell you cheap. Anyway, I love the fact that it dropped. So Monday, Tuesday, Wednesday, we're going to keep a good eye on this thing. And when she turns, if the numbers look good, yeah, I'm going to buy it. But at this moment in time, I'm just going to watch it. So I'm actually going to put FedEx on my list for next week. FDX. And next week, we're going to take a look at FedEx. Hellraiser, did I buy it? No, I already owned it and I just carried it into another week. Uh-oh. missed all these questions. Uh-oh. Wow, I missed a lot of questions. Holy cow. Walmart, Mara. Okay, here, I'm caught up again. Here we go. 86, he said he covered it already. Just want a yes or no. Okay. On Marathon, yeah, no, I didn't buy it this week, Hellraiser. I didn't buy it this week. I bought it a couple of weeks ago, and I rolled it forward to get an additional 2 or 3%. Okay, so if I buy it a couple of weeks ago and it doesn't hit my target, well, let's go back to here. Back to here. Okay, so let's take a look at Lowe's. Okay, Lowe's is right here. I like Lowe's. Okay, this is October. So Lowe's is going to pay a dividend on the 23rd of October. All right, if I want to collect that dividend, I have to buy it anytime before this date. So the 22nd, the 15th, the 2nd, the 10th, the 17th, the 14th, the 21st, any day before that date, and then I'm entitled to the dividend. Okay, fine. Here's something you may or may not know. With the dividend coming up, stocks have a tendency to increase in value because of the dividend. Okay, stocks only move for two reasons, a known reason and an unknown reason. Okay, if we know why it's going to move and when it's going to move, great, awesome. Okay, but let's look at the unknown reasons first. An unknown reason could be a major lawsuit coming out of nowhere, a natural disaster, hurricane, tsunami, earthquake, you know, those type things, fire. Those things could affect the stocks. Do you remember when Exxon Valdez crashed up the upper Northwest? Well, Exxon stock dropped like a rock. British Petroleum dropped like a rock when they sprung a leak in the Gulf of Mexico. Did they know that was going to happen? No, that's an unknown reason. You cannot predict it. You cannot act upon it. You can only react to it. So I was watching a British Petroleum drop, and it gets to a certain point, I think to myself, holy cow, this is British Petroleum. They're $1 trillion company. Yeah, I'm going to buy some of that at I think it was like 54. I said, hell yeah, I'm buying it at 54. And then she went up, I made money off. But it's not the point. The point is two reasons, known and unknown. You cannot act on unknown reasons because they just pop up. All right? Now, a known reason, that you can trade on. So what's a known reason? Well, you have dividends. You have earnings reports. You have stock splits. You have holidays. Who's this? Thomas Reed. How are you today? Woohoo! Thomas Reed. Okay. Known reasons. Seasonality. Well, what the heck is seasonality? Well, winter, spring, summer, fall. Certain stocks react differently based on the time of year. Perfect example. I always laugh when I say this because once I say it, people go, of course. Weight Watchers goes up in value the beginning of January every year. Why do you think that is? Okay. Hershey's chocolate. They go up the first week of February. Well, why do you think that is? Well, you got Easter and you have and Valentine's Day right around the corner. The two biggest chocolate days of the year. Yeah, okay. You have certain stocks move certain times a year based on the weather or based on the year. The fourth quarter is right around the corner. What's big in the fourth quarter? Christmas. It's a huge holiday. A lot of stocks move up in the fourth quarter. That's called seasonality. All right, let's keep on moving. Jason, buy the New World Liberty. Yeah, I don't do crypto. Sorry, dude. True story. Yep. Okay, anyway. This is, thank you, INSG. Eric, what the heck is INSG? Didn't we take a look at that already? I think we did. Yeah, we did. You want something to invest to and share the profits. Okay, that's not. Okay. Alrighty. More. What site is that? We already did that. All this over here. Wait a minute. Josh, all of this over my head. Okay, we already talked about that one. Okay, we already talked about that. We already talked about that. We already talked about this. Yep, I already talked about that. Could it mean Macy's stocks would go up because we're in fourth quarter? Macy's is going to be a little fickle. Okay, Macy's is just like Walgreens and a few other stores that are having issues with theft because the current administration are gutless and they will not prosecute. Okay, so it's perfectly legal to walk into a store, steal $900 worth of crap, walk out. You don't even get a slap on the wrist. That's the issue they're having. Okay, so a lot of stores are bleeding. So Walgreens is getting rid of 25% of their stores. Okay, there's 8,700 stores worldwide. Okay, now Andrea did a nice report on Walgreens. We shared it a couple of weeks ago. Walgreens owns a lot of stuff other than just those stores. We already did Walmart. We already did Mara. We already did FedEx. Mara, blah, blah, blah. Bo, tell me another request so I can see it. Yep. 86, you didn't cover it. Yep. What's dividend stock? Oh my goodness, NFL. All right, NFL. Point blank. You got stores everywhere you go. Walmart, Kohl's, Nordstrom's, Walgreens, Home Depot, Lowe's, Colgate, Palmolive, Procter & Gamble, ExxonMobil, Hess, Conoco, Phillips, Bank of America, Nordstrom. I can go on and on and on. There's over 9,600 and whatever it is. A whole bunch. Those are all companies. Now, a dividend stock company is a company that takes their profits and shares it with their investors. The very first dividend stock was in 1602, and that was the VOC, which was the British Dutch East India Shipping Company, the VOC. Okay, they went door to door, knocking on the door, saying, hello, hello, have I got a deal for you? You invest in this company and we guarantee you profits that the company makes. So if the company makes a profit, as a shareholder, you are entitled to a portion of their profits. That is a dividend stock. Okay, half of the companies in the stock market pay dividends. The other half do not. They take all their profits, put it back into the stock for capital growth. So if you want to see a stock go from $5 to 500, yeah, that's capital growth. Those are not the ones I'm looking for. If that's what you're looking for, you are in the wrong place. This is boring, this is slow, this is repetitive, and this is monotonous. It is a safe, predictable, consistent 1% per week. Now, I know a lot of people nowadays, 1% a week? Yeah, no. This is not the right place for you then. I'm retired. I want a safe, predictable income. I don't have the luxury to take $5, $10, $15, $20, $30,000, throw it into a stock and wait 5 or 10 years for it to move. Nope. I'm not there. I want consistent cash flow. So however much money you think I have, I don't. I have enough that at 1% a week pays all my bills. That's all I need. What are your thoughts on passing down a portfolio to children? Well, Marcus, that's a great idea. Now, my portfolio is in my corporation's name. I am just a CEO. So when I pass, my son, who is the vice president or the chief financial officer, all he does is just scratch out my name, put his name on there, now it's all his. Second coming, thank you. Okay. So when you set up your account, and this is big, when you set up your account, you really should talk to a tax strategist or a tax planner. Someone that will show you how to protect your assets, how to protect your money, how to not pay any taxes if you desire not to pay taxes. Now, I pay plenty of taxes. Okay, I pay my real estate taxes. I pay my my sales tax. Okay, I pay my excise tax. I pay a lot of tax. But what I don't pay is income tax. Why? Because my accounts are set up in a way where I don't have to. All right, so it's very important to talk to a tax strategist or a tax planner because it is your legal right to pay as little income tax as possible. And that's up to you. Please don't ask me questions about it because I don't want to get into it. Last time I did that, I got flagged, and I don't want to do that. Raising hell, I know he has it in the last account. Not sure to purchase it this week. Yep, nope. Do you ever use stochastics? Okay, explain to me. How do I sit a 9-year-old down and talk to him about stochastics? Yeah, ain't happening. You're forgetting the point where it has to be simple. Okay? Talk to your grandchildren or your children who are 8, 9, 10 years old, and you tell me if they understand stochastics. Also, besides that, maybe not your children. Maybe your children are more advanced than others. Mine was just a simple, ordinary, everyday, normal child. Stochastics, no, went right over her head, lose interest, no thank you. It had to be simple, safe, predictable, and consistent. Simple, safe. Stochastics are not simple. Can you short JDT stocks? It seems like a no-brainer. Yeah, be my guest. It doesn't have 20 years of increased dividends. It's not even on my list. Estee Lauder is a dog stock. So a put on next engulfing candle down could be a decent opportunity. Yes, it could. But it's not a trading strategy that I teach my 9-year-old daughter. Well, she's not 9 anymore. She's 25. She's actually taller than me now. Gap. Hal wants to take a look at the Gap. JAH, we already looked at Walmart, and we already said no. Sorry. Gap, GAP. GAP. Whoops. Let's go back to where we were. GAP. Here we go. Okay. First thing, as always, high, low. Where was it? Where is it? What direction is it going? It's at 2032 at the moment. The 2056 is what I can buy it for on Monday. The 2050s are going for 38 cents. That is well over 1%. And I like the Gap. I know what the Gap does. Okay, so it's not a mystery. Some people rattle off these stocks. I was like, what the hell is that? What the hell are you thinking? One of my favorite things to say. What the hell are you thinking? All right. That being said, let's take a closer look. A year ago, the Gap was at $9.85. Okay. The high of the year was right here in the beginning of June, and that was $30.75. So from the high of the year, she drops, pulls back, drops, pulls back, drops, pulls back, blah, 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 blah. That's all they do. Last 30 days is what I want to take a look at because that's where all the action is, the last 30 days. Do I really care what it did 30 days ago? I mean, 6 or 7 months? Not really. I want to know what it did this week, last week, the week before, because I want an idea of where I think it might be going. It's not guaranteed, but it gives me an idea. Because as you can see, today was a lot like yesterday, which was a lot like the other day before, and they're very similar. So if I'm looking at it here, see it drop, move back up, drop again. Now it's right in this area, no real direction whatsoever, so I'm a little iffy about that one. But here's seasonality. You ready for seasonality? Some people love this one. Why is that like that? There we go. Here is seasonality. Now, a seasonality chart shows the whole year. So to the far left is January 1st. To the far right is December 31st. The blue line represents the movement of this year. January 1st, way over here, and currently this blue dot is today. Right? Now, the red line represents 10 years worth of movement. So that's 2014, 2015, 2016, 17, 18, 19, 20, all the way up to where we are. 10 years of movement based on the average movement historically. So I want to look at this area right here, the end of September, beginning of October. She's still going down, but look at the fourth quarter. The fourth quarter right there, and she goes to the upside. Well, I don't want to be into it now. I want to wait till the middle of October to buy it and catch that run up right there. That's historical performance. Well, historical performance doesn't overshadow the current movement. And the current movement, well, it does look like it's going to the downside. So I'm going to say no to the Gap for this week because I have a whole bunch of other companies that are better looking than this one. Oh, lose aso. Okay, you're worried about taxes. Dude, if you're worried about taxes, you really need to talk to a tax strategist. Not an accountant, not a bookkeeper, not a CFO, not a certified public CPA, not one of those either. A tax planner or a tax strategist. They know how to set up your account. They know what you can and what you cannot write off. Okay? They have the IRS code book, that big, huge freaking book. It's a code book. It's not a law. There's no laws on whatsoever on taxes. Okay? As a matter of fact, when we get on taxes, there is currently an open prize of $50,000 if anyone can find the law that states you are required to pay an income tax. Now, a lot of you might be thinking, oh, 50 grand, I can find that law. Yeah, have fun. It doesn't exist. All right, anyway, let's keep on progressing. Walmart, we already took a look at that one. What is red? What is green? I have no idea what you're talking about, but can I adopt you? Sure, why not? I have lots of work to do. So I'm assuming when you ask what is red, what is green, because everybody asks that. Okay. What is red, what is green? I'm assuming this is what you're talking about. Red, green. Okay. Those are the current trades. You read the trades, they'll tell you exactly what they were. Okay, the red ones are sell orders. Okay? Sell, sell, sell. The green ones are buy orders. Okay? So right here, covered call. I bought 500 shares of General Electric. I sold 5 contracts at 160. I sold the 160s for $5 a share. That's a nice rate of return. Oh, co-host. 1, 2, 3. Yeah, you guys, you want a co-host? Great, fine. Danny, send me your phone number. I'll give you a call. Certain things I don't want to talk about. I don't want to talk about NASDAQ. I don't want to talk about cryptocurrency. I don't want to talk politics. I don't want to talk anything unless it has to do directly related to investing for weekly cash flow with dividend stocks. Every time I say that, they all bolt. Nobody actually leaves their phone number. Okay, great. I love my grandkids. You're a good man. Well, Cassie Nix, how are you today? Ah, 86, thank you for that. I can always count on some of you guys for taking all the questions that are popping up faster than I'm getting to them. Guidance, how are you today? Thank you for sharing, you're welcome. Is your YouTube Dividend Stock Talk? Nope. My YouTube is The 10-Minute Trader. Hold on, let's go right to it right now. Hold on a second. Because you are going to find a lot of people copying me. Right now, as of this moment, there are 27 posters pretending to be me. All right, so here's my YouTube right here. Click on that. The 10-Minute Trader. Okay, do yourself a favor. When you click on that, go to Google. Who owns the 10-Minute Trader? How long has the 10-Minute Trader been registered? I've had this website for over 20 years. Okay, you can do the research. Over 20 years. Videos. Oldest. I mean, the chart basically almost same. Now, March 23rd, 2013.
All year round, you get what, a month and a half, the beginning of the year, going sideways with a little bit of downtrend.
1 year chart, 90-day chart, 30-day chart.
All the way. In the last 90 days, we had a gap up there, we have another gap up there, and here we are finding a channel at the very last of the 30 days.
Okay, I've been around for a while. Okay, I don't hide anything. Everything's available for you to see. For your viewing pleasure. Okay, let's keep on going. What do I think of SPX? No. Sorry. That was quick, wasn't it? Right, so if you want to see it, let's take a look. SPX. Wait a minute, where's my options? There's no options. Waiting for data. And look at SPX. 5,756. Do I really look like someone who would pay $5,000 a share? Yeah. Sorry. Nope. Ain't me. Excuse me, what broker do you use to work? I use Charles Schwab, and it's not that I like Charles Schwab, okay? When I first started trading 20 years ago, I used Thinkorswim. But then old Tommy Boy, he's the one who created Thinkorswim, he sold out to TD Ameritrade. Okay, fine. I used TD Ameritrade for 5 or 10 years, and TD Ameritrade just recently got bought out by Chucky. So now Chucky owns Thinkorswim. So yeah, I haven't found any trading platform as good as this one. Now I've been trading for over 20 years. I've never found one as good as this. Has everything I'm looking for in it. All right, let's keep on going. What app do you use that has low fees? Asking on Reddit summons a 100 bot, can't get a good answer. Well, you're going to find that a lot of the mobile apps have low fees. I actually have a trading account with Robinhood. I love it. It's simple. It's easy. Everything is right there. But it has a few different rules than Thinkorswim. Thinkorswim, I can let an option expire worthless. Okay, so I can sell it for 20 cents and I don't have to buy it back. It will go to zero and it gets zeroed out. But with Robinhood, if I sell it for 20 cents, I actually have to buy it back on a Friday afternoon before the market closes. And if I don't, they fill it for me, and they're not always as generous. Oh, look at this. It's past 11 o'clock already. We haven't even looked at very many stocks. You guys keep giving me all these questions. Bo, I will send another request when you read this. All right, Bo, I'm reading it now. Thoughts on NEE. Isn't that Nucor? NEE? NEE? Nextera. Okay. NEE is NUE. Okay, anyway. All right. It's going to be no for Nextera Energy. The only reason that is, look at where it is. Okay, it's at the high of the year. Look at all this space. A year ago, she's at 50. Now it's at 85. That's a $35 increase. Yeah, no thanks. 86, you're wonderful, dude. I love the way that you answer these questions before I have to get to them. That way I can keep on moving. Your thoughts on Intel? Ooh, I love Intel. Okay, INTC. INTC. INTC, here we go. High, low, where was it? Where is it? What direction is it going? Great. See this big drop right here back in August? Yep, I bought it back in August when it dropped. All right, let's take a quick look. Right now it's at 21.84. We can buy it at 21.99. So the 22s are going for 86 cents. Holy cow, that's just below 4%. I'm going to put Intel down for next week. INTC, because I like Intel. Okay, that being said, let's move forward. High, low, was, is, blah, blah, blah. All right, a year ago, we're at 35.60. Okay, we topped out the end of the year in December at 51. Now, take a look at this big drop right here. Okay, back in August 1st. August 1st, we're at 30 bucks. Okay. By August 7th or August 6th, we're down to 19. So it goes from 30 all the way down to 19 within a week. That's a 30% drop. That's a third of your money just disappeared within a couple of days. Going sideways for a little bit. Look, up, down, up, down, up, down. She's going to the upside now. I like Intel. Last 30 days. Here's our last 30 days right here. So I'm going to say no to Intel only because she's at the high of the 30-day period. See, down, up, down, up, down, up. Yeah, next she's going to be coming down. Look at the amount of volume here. Those blue lines, that's the volume. Okay? Dexter's dad. Thank you for that, Dexter's dad. That was nice. Okay. Tatin Ramen, OMF. Okay, I'm not quite sure what that means. OMF. Yeah, sorry. On Main Holdings, monthly. Remember I told you I don't do monthlies. The numbers just ain't right. Osvaldo, I like Qs for options. Great. I don't like Qs for the rate of return you're going to get. And the dividends for the Qs, inconsistent. Okay, so I'm assuming you're not retired. Because if you were retired, you'd be more interested in consistency and predictability. Did you cover for FDX? Yes, Ryan, we did. Thoughts on NEE? We just did NEE. I just did OMF. That's a no. OMF doesn't have weekly options, so it won't fit. Thank you, 86. Earnings were rough. Yep. Bad earnings, bad forecast. Okay. FDX lowered revenue expectations for next year. Okay. Okay. Triple Witch Day. Many stocks had huge volumes today. Okay. FedEx missed earnings. That's probably makes sense. Felix, how you doing? Indie playlist. Is the spread why Kenny G bought a 250? I have no idea. Could be. I have no idea. Buy put on FedEx. Okay. Where do you buy the stocks? What's the platform? Okay, Matt, this platform is Thinkorswim. It's offered through Charles Schwab. You can download it for free and you can use it for free. They have a paper trading account. Now, I've been paper trading for over 20 years. I still make mistakes. I always tell everyone, you want to start out, do some paper trading first. You will know when to put real money into it. Okay, you will. Okay, when you keep seeing profits go by and you keep thinking, damn, I should use real money. Damn, I should use real money. At some point, you say, you know what? Take the leap. DJT, no. Intel, but to get taken over by QCOM. That'd be cool. Johnny Ringo, how are you today? All right, Tom, DJT, it doesn't have 20 years of anything yet. Yep, and I don't do puts. Thank you. What about Zoom? Well, I use Zoom almost every day, okay? Because we have a morning trading group for the people that are serious about trading and want to trade alongside of me. Okay, you can actually see every single trade that I make, and after I'm done with my trades first thing in the morning, okay, you can ask any questions you want. I will guide you through as best I can. However, I cannot tell you what to buy, and I cannot tell you what to do. I could, but I ain't going to. I insist on everybody doing their own research, finding out what is right to you. Don't listen to a damn word I say. I'm just some random guy on YouTube. You've never met me, except for these people over here. They did. And a few people here. I think like one person here has actually met me. But those people over there, they've met me. They don't really know me because it was years ago. Anyway, QCOM. Ryan, just take a look at QCOM. QCOM. Here we go. QCOM. First thing, as always, high, low. Where was it? Where is it? Didn't we just take a look at this one? The 169s, okay. The 170s, 3.25. That's not quite 2%, but it is close. Okay, Tom, DJT is going to be a no. Okay, we're looking at QCOM at the moment. A year ago, QCOM is at 111. It bottomed out at 104, and that was the end of October. Okay, here's our top. Our top was 230.63. Okay, we stair-stepped our way down. Look, down, up, down, up, down, up, down, up. Cross, down, up. Here's where we are now. Come to the downside. Come to the downside, Luke. Together we can rule the NASDAQ. Okay, so here we go. It's sideways for a bit, dropped. Here's our bottom. Here's our 30-day top. There's going to be profit taking. It's going to drop. That's what happens. WSG, homeboy. Woo! I'm a homeboy. Cool beans. WSG. What the heck is WSG? WSG. Wanda Sports Group. Are you kidding me? Has no options. That's a no. See, the computer can't even find that. Why the hell would I invest in that thing? All right. Does politics or international events affect price fluctuations? In some stocks it does, but not all of them. Thoughts on NEE? We already did that one. Just learned a lot in 15 minutes. Way to go. Amazon, Colin, hell no. Amazon does not share its profits. As a matter of fact, Amazon is not even profitable yet. If you take a look at the books on Amazon, you'll see the only way that they're going is because their stock price keeps going up. People keep buying it, but they're not profitable. Oh, I didn't know that. That's why you do your research. Go in and take a look at all the numbers. Here we go. AMZN. Okay, 191. Look right here. No dividends. Okay, why would I? Okay, the name of the station is called Dividend Investing for Weekly Cash Flow. Dividend Investing for Weekly Cash Flow. It has no dividends. Okay, it's basically a no. But if you take a good look at it, you can take a look at the statistics. Okay. Do you see that right there? $22.54. Okay, so $191 for the stock, but it's only worth $22. So if you take a look at the books, the spreadsheet, what they own, what they owe, the balance sheet. You take a look at the balance sheet. It's only worth $22 a share. So why the hell are you paying $191 for it? And they don't have and they don't have dividends. They don't share their profits. Why? What the hell are you thinking? I love that line. What the hell are you thinking? Why would you buy something? Why would you invest your money in a company that's not profitable? Are you looking for capital appreciation? Because they have it. Okay? That's all they have, capital appreciation. They're not profitable yet. That's going to be a no. All right, so let's keep on moving. Holy cow, we got 9 minutes left. Friday night's going by quick. And the only reason I stay on late at Friday nights is if there's over 200 people. So if you want me to stay later, like, share, comment, subscribe, all that crap, bring those numbers up. If it's above 200 by 11:30, I'll stay later. Other than that, it's a weekend. All right. Thoughts on TMF? That's an ETF. Why the hell would you give your money to a computer? Haven't you seen enough Terminator movies? Think about it. You're giving your money to a computer. You're saying, I'm too lazy, I'm too irresponsible, you do it. What do you think they're going to give you? Okay, let's go back to here. Put TMF here, TMF. Okay? TMF, 3.16. I can buy a U.S. government bond that pays 5%. Why the hell would you put it into why would you give your money to a computer that gives you 3.16%? And look at the year-to-date total returns, negative 4.95. What the hell are you thinking? Seriously, come on. This is your money we're talking about. I know nothing at all about you. But yet, I'm questioning why would you take a look at this piece of crap? It's paying 3%, and year-to-date total return is negative 5%. Seriously? I came into $60. I was thinking about putting it all on Disney. Well, $60 ain't going to do anything with Disney. All right, let's go back to where we are. The way we were. Okay, let's keep on going. All right, sorry, dude. TMF, too bad. Do you know? Uh-oh. Oh, 60,000. Cool. Why would you want to put it into Disney? Let's take a look at Disney for a second. All right, so let's take a look. I actually talked to a gentleman today. He got Disney. He says, nope, I'm buying it long term. I said, what the hell you want to do that for? A year ago it's at 80. it jumps up to 140, which is a 50% increase. Then from a 50% increase, it goes back to 80 again. So you just lost all that money. Okay? From here to there, back to here again. What was the point? So, same question to you. You want to put in Disney? Why? Think about it. Why? Currently, Disney's at 93.75. Well, 93.75. Okay, so the 94s are going from 91 cents to 99 cents. Not quite 1%. But look at the chart. The last 30 days. Okay, here's the last 30 days. 30 days ago, we're at 90. She went up to 92, drops down to 84. What was it, 84? Is that right? Nope, drops down to 86. Then from 86, shoots up to 95. There's your high right there. What happens after a high? Well, you get assholes like me that start taking profits and makes the stock drop. Why the hell would you want to do that? Right now, why not wait 2 weeks till it gets down to 88? Because what do you think is going to happen? Well, it goes from here, 86 to 95. That's that's a $9 increase. Okay, from 86 to 95 is a $9 increase. That's over 10%. A 10% increase in a week and a half. Well, yeah, there's going to be profit taking. Profit taking is going to bring it right back down here to the $80, $89 area. So just wait. Okay, it's not going anywhere. It's been around for over 100 years. It makes sense. Imagine that. It makes sense. Hey, it goes up, it goes down. It goes up. Well, where do you think is coming next? Down. Is that guaranteed? No. It's just an idea. Mike Jock, am I legit? No, I'm not. I'm a crook. Send me all your money. You don't know me. Do your own research. What I'm asking you is, does it make sense? Think about it. Does it make sense? If you don't know who the stock is, if you don't know what they do, don't buy it. Never sell at a loss. Does that make sense? Well, hell yeah, it makes sense. Okay, but do your own research. Seriously. What I say is one thing, but what you believe and what you act on, well, that's your own responsibility. Okay, do you know who Disney is? I know who Disney is. I live in Florida. Okay, I've been to Disney World dozens of times. Would I go again? No. No, maybe I would, because I really want to go to Hogwarts. I really do. ENB. Didn't we look at that already? Okay, so Mike Jock, yeah. See what 86 said? Mike Jock, he's here every night, sharing his strategy for free. Take it for what it's worth. Okay, that's an excellent phrase. Take it for what it's worth. What did you pay for it? You paid absolutely nothing. So what are you losing? You're losing your time. Well, that's your responsibility for being here. You don't want to be here? Fucking leave. It's actually that simple. What I'm showing you, it's a simple, safe, predictable strategy that was created for a 9-year-old. If you can't grasp it, I can't help you out. Okay? I'm telling you honestly, don't listen to a damn word I say. Do your own research. Ask questions. The better questions you ask, the better your life is going to be. Okay? So, hey, how do I make money? Well, go stand in the corner and sweep. Someone will give you some money. You weren't specific. It was a crappy question. You ask a better question, you get a better answer. You get a better answer, that gives you to a better position. Now you know something. What do I think about Salon? Salon, I have no idea what that is. Okay, ENB, big brain. I think we already looked at ENB. ENB. Is that N brain? ENB. Enbridge. Yeah, sorry, dude. That's a monthly. Okay, I've already went over monthlies. The numbers just don't work. 28. I'm going to go for the last questions. Intel Gore buy offering blah blah blah. Okay, got it. I own calls. Doubt it's going down. I have no idea what that means. Mesh, how are you doing today? All right, first fireman Sam, Kamala or Trump. I don't do politics. You don't want to hear my answers because I don't know if you guys are concerned about safe spaces, safe words. Oh, you insult me. I really don't give a rat's ass. I'm from Generation X. We don't give a shit about your feelings. Seriously, we don't. At least I don't. FDNX. What the heck is that? FDNX. Yeah, that's not even in here, dude. SPY. That's a hell no. That's the same thing as the Qs. Okay, so let's look at SPY. SPY. Okay? 1.21. Seriously? Level Life? Seriously? 1.2%, and you're excited about that? Okay, that's my opinion. Okay, so let's take a look at historical data. Let's see how well they pay their dividends. We know the Qs suck. Okay, historical prices, dividends only, maximum amount of dividends. Okay, so let's take a look at the numbers. Let's go back to 2000. All right, here we go. 37, 35, already starting out bad, going backwards. 38, 41, 32, backwards again. Yeah, no thank you. 35, 37, 39, going up. Drop 6 cents. Yeah, no thank you. 35, 38, 44, 35, backwards again. 36, 40, 52, 40, backwards again. 41, 47, 35, backwards again. 57, 47, backwards again. 49, 52, 67, 52, backwards again. Yep, hell no. Same thing. Up, down, up, down. Should I invest in Target? Colin, how are you today? Colin, Target, TGT. Now, if you didn't know, Target has been in business for over 100 years. 100 years. Target's been in business for 100 years. 5 decades or more, they've increased their dividends every single year. Every single year. For 5 decades or more, Target has been increasing their dividends. Great. All right, so here we are. Now, I don't like Target because of a lot of black swans. Black swan, black swan, black swan, black swan, black swan. Okay, what's a black swan? It's when the stock jumps out of nowhere. Okay, now why do I know that? Because I owned it at 135 and it came down here to 102. Yep, I owned it at 135. It was down here at 102 on this day right here, right here. Okay, that was a Monday. I sold the 112s. Okay? The 112s, I got 50 cents a share. Overnight, it jumped $16. $16 overnight. I lost $12,000 overnight. I had to dish out 12,000 bucks. So here's my choice. Do I dish out the 12,000 bucks or do I lose 25,000? It wasn't a choice, and it wasn't a good choice. What do you think is the best company to invest in and why? Colin, I can't give you that answer because I know absolutely nothing about you. I don't give advice. I don't give recommendations. I read numbers and I give my interpretation of the chart. That's all I do. This is nothing but pure entertainment value. Yes, I show you what I do. I show you my numbers. I show you my trades. But it's just entertainment. I seriously ask you guys to do your own research. All right, so I'm going to go through the rest of these questions. I'm not going to look at anything else because we're past 11:30 and we're below 100, so we're done. I would buy long-dated calls on UNG. Cool beans. I don't know what your end game is on that, but all right. Got Thinkorswim set up. So many stuff in it to learn. Okay, Mesh, what I'm going to tell you about Thinkorswim, there's 90% of everything in Thinkorswim you're never going to use. Okay, 90% of everything on Thinkorswim you're never going to look at. Okay, you're going to look at 1 or 2% of what they have there, and that's it. Sorry, VOO, hell no. UNG, no. Hola, maestro. ¿Qué pasa, amigo? ¿Cómo está? All right, CLM. Oh, look at this. I'm done with the questions. Woohoo! Walmart, we looked at Walmart. It's going to be a no. Callie, we already looked at Wally World. Okay, Wally World is going to be a no. WMT. And the reason why Wally World is going to be a no, okay, see the chart? Here's the high of the year. Last week. Look at all this space here. Okay, if you think for 1 minute someone who bought down here is not taking a look, say, wait a second, all this profit is just sitting here. Should I take it? Should I not? It's going to drop. I have no idea how far it's going to drop. But I do not buy at a high waiting for it to go higher. No, 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 no. You make the most money in the stock market buying low and then selling high. There's plenty of opportunities for Walmart to come down. Okay, look, March 4th, to May 6th. Up, down, up, down, up, down, up, down, up, down, up, down. That's all it does. If you like a stock, great. Look at it every day. I mean, you watch TV every day. You probably look at your phone every day. You probably hang out with your kids every day. You probably get dressed, go to the bathroom, take a shower. There's a lot of things you do every day. If you can't take 5 or 10 minutes out of your day to plan your financial future, well, hey, then you deserve what you get. That's it. It's actually that simple. We're all adults here. We're all over the age of 18. If you think somebody's coming to your rescue when you're retired, I got some news for you. I'm still waiting. Okay? Here's the thing. When I was in school, they say, well, you got to do this, you got to do that, you got to do that. I'm still waiting to this day. I'm 60 years old. I graduated over 40 years ago. Nobody's ever come to my house and kind of quizzed me on the shit that they made me learn. Okay, so if you think someone's coming to your rescue when you retire, you're sadly mistaken. If you don't take responsibility for your own money and your own time, that's your own damn fault. Sorry to be so blunt. I come from an age group where we really don't care about your feelings. No such thing as a safe place. I'm not going to give you a participation trophy. No, you either win or you lose. That's it. You invest your money, you're going to make money, you're going to lose money. It is what it is. All right, that being said, it's 11:35. Woo! Another day's done and gone. We are officially done with week number 12 for the third quarter. Yeah, thanks, Tony. Yeah, you don't want to mess with Gen X. We just don't give a rat's ass. We don't. You know, you can ask anyone in my age group. We don't care. Seriously, we just don't. All right, all that being said, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, take you along for the ride for a safe, predictable, consistent 1% per week, and 1% a week is over 50% per year if you do it right. Remember, it was created for a 9-year-old. Okay, you are all over the age of 18. If you can't figure it out, I can't help you. All right, simple, safe, predictable, consistent, no way to lose. 5 rules: never buy something you don't understand. Never sell at a loss. Make sure the company is consistently profitable. Make sure they have weekly options. I want weekly cash flow. Weekly options is a must. And then double check all the numbers. Make sure the numbers work. What am I buying it for? What am I selling it for? What am I collecting as a premium? Is it over 1%? Great. That's what I'm looking for. Is it the right time to buy? That's key. They all work together. It's really that simple. 1, 2, 3, 4, 5. It's that simple. You guys have a great night. We'll see you again tomorrow night, because the sun will come out tomorrow. Bet your bottom dollar that tomorrow will be sun. Just thinking about tomorrow. Wipe away the cobwebs and the sorrow.